Canada's inflation rate hit a three-decade high in April. Stats Canada says the annual rate of inflation hit 6.8% last month, with food and gas prices among the biggest increases. Food prices were up 9.7% year over year, the biggest jump since 1981. Gas prices were up more than 36% over last April. Shelter costs increased by 7.4%, the fastest pace since 1983. Meanwhile, stocks closed sharply lower on Wall Street today amid renewed fears that inflation is hurting U.S. companies. The Dow sank more than 1,100 points, or 3.5%. The S&P 500 dropped 4%, and the Nasdaq tumbled closer to 5%. The losses here in Toronto were not as steep, but the TSX still fell nearly 400 points, or 1.9%. Joining us live tonight is business journalist and founder of All Caps Content, Bryan Borzykowski, along with the president and CEO of the Ontario Chamber of Commerce, Rocco Rossi. Bryan, let's start with you. Nerves tested today, no doubt, on the market, with a huge drop for the Dow, as you just talked about, in the worst day since the start of the pandemic. What's the takeaway here for investors?
Yeah, this is for sure tough. It's been a tough year. Year to date, the Nasdaq's down close to 30%. The S&P 500 close to 20%. We're getting into real bear market territory here, and that is obviously troubling for people who are looking at their portfolio. My advice is don't look at your portfolio. Over time, stocks increase, and there are times where they go up. There are times when they go down. And yes, this is in a particularly difficult period. But if you keep your view on your retirement goals, on your long-term goals, hopefully by the time you retire, things will get better. Retirees for sure are on a tighter budget now, but you just got to kind of stay the course and hope for the best, because if you sell out and panic, you never know when to get back in, and you'll miss that upswing when it does eventually come.
So, Rocco, with all this in mind, the Ontario Chamber is putting out a call to the provincial political parties today. You say the economy is at stake this election. Explain what you want to hear from the provincial party leaders.
Look, at small business in particular is still reeling from COVID and will take some time to recover. We're seeing bankruptcies going up as costs rise, and the ability to pass on price is constrained. So what you want is to rebuild confidence. And number one is do no harm. Add no new taxes, new costs, new burdens onto businesses and consumers that are already reeling from these costs. And what can you do to accelerate growth in the economy, and especially productivity growth? Because all of us would like to earn more, have higher wages, but if that doesn't come with higher productivity, output for all of the time that we spend, then those costs simply then get passed on to the consumer, and inflation then eats it away, which is the cycle that we desperately want to avoid.
And so, Rocco, just to follow up, do you feel the affordability crisis is so far largely being ignored on the campaign trail?
Well, aside from a few odds and sods of announcements, there is no systemic economic plan that would center on both affordability and growth. And that's what we'd like to see: a lot more time spent, a lot more focus by all the parties.
Mm-hmm. Bryan, a three-decade high in Canada's inflation rate. For the average consumer, just seeing what it means when they have to go buy pretty much everything from gas to groceries, explain what's fueling the ongoing surge.
Yeah, well, there's a few things. I mean, number one, demand is picking up after the pandemic. People are getting out more, so people want more stuff. So that's causing prices to rise. But we're really seeing a lot of this happening because of the Ukraine crisis. Oil prices have risen, and energy costs work their way through almost everything. I mean, you need to ship goods from one place to another. You need fuel, you need gas. And so it's not just people driving their cars, to their cottages. It's businesses trying to ship goods. So that goes into increasing costs. And same thing with labor costs. costs. The labor market is very tight right now. Well, wages are rising, not as fast as inflation, which is, another problem. That means people aren't making as much as prices are rising, but labor costs are rising. That gets factored into the price. You're not going to have people reducing their wages in the future. You can reduce wages through, technological improvements and productivity improvements, but those are some of the things that are causing prices to climb. And it doesn't appear that that's going away anytime soon. We just saw wheat prices shoot up because that's been constrained because of the Ukraine crisis. And then India just put a ban on exports. They were kind of filling a gap there. So we saw that increase. So that should probably work its way. So there's so many things going on. It's a global market. And so it's hard for, politicians or people to do much here because a lot of this is impacted by global forces.
Rocco, what are you hearing are the biggest concerns for businesses if more isn't done to make life more affordable?
Well, as I noted before, you're seeing an uptick in bankruptcies already. And this will increase now that supports have been ended, while people's businesses have not returned to pre-pandemic levels. Let's not forget there's really kind of two economies out there. There is the segment that over the course of the pandemic in technology and essential services and construction, despite some bumps in the road, did quite well, whereas those who've been in tourism, in hospitality, in personal services, in live music, have been hit hard from the beginning and are very slow to come back. We're facing significant labor shortages in key areas, skilled trades, a backlog in immigration, particularly with skilled labor. You're seeing supply chain blockages in a number of key areas, from microchips to now food and fuel because of the war in Ukraine, but it was predating that, as Bryan has pointed out. There are a number of factors at work. So what we're calling on the government is, again, don't pile on. There are some things that are out of your control, but there are many things in your control. So don't be adding costs, adding taxes, adding fees, adding complexity. Help to rebuild confidence in the economy so that we can grow out of this.
So, Bryan, finally, the question we all want to know: can we as consumers expect any relief anytime soon?
If I could predict that, I'd be a lot wealthier than I just should be. But it's hard to know because all of these global forces are still impacting prices. If the war ends and things go back to some sort of normalcy, then yeah, maybe things, supply chains can get back going. But I think that's, a far ways away. We don't even know what things will look like after that happens. There are still issues in China with lockdowns. They're not as open as we are. So that's a major manufacturing center there. So that's impacting the supply chain as well. So I think there's still a long way to go here. Hopefully, these are year over year numbers. So, maybe when we get to next year, hopefully the increase won't be as high. Maybe we're at a base now, but it's hard to tell. If I've learned anything, it's not to predict the future. And so I'm not going to try.
All right, we'll leave it at that. Bryan Borzykowski and Rocco Rossi, thanks so much for joining us tonight.
Pleasure.
Thank you.